Welcome to episode 1 of Hard Questions, Quick Answers, sorting out all the questions investors are going to ask in your fundraise.
Ask Alex. Ask Alex. Because you don't know what you don't know. And if you don't know, now you know.
Yeah.
How much are you raising? This is obviously one of the most common and basic questions that every investor will ask you, even if they're not that interested. This is such a relevant question because it dictates whether or not the investor can even invest in you at all. You have the potential to look pretty stupid if you are pitching a seed stage investor who normally invest $500,000 and ask them to invest in your 20 million Series B round. This shows that you didn't do any preparation to understand investors. And frankly, I'm sort of surprised you got a meeting in the first place. But let's say you're looking to raise 1.5 mil and the investor normally only invests 500K. Now they need to think if they have the capital or dry powder to be able to participate in this round. If they are normally a lead investor, then their 500K may not make them a strong lead. So they may have to end up being a follower instead, which may not suit their business model and their brand. Once you answer this question, everything else can be linked back to it in some regards. So it's like an anchor. The next question, of course, is going to be, if you're raising 1.5 million, how are you going to spend that money? Your marketing plans, who you want to hire, are all linked to this very important number. So give it some thought. So fundamentally, this question serves to see if you've done the most basic of preparation. It gives food for thought for the investor as a basic filter. So you need to have given this some serious thought. The amount you raise at this round needs to be just enough to get you from round to round funding, or even profitability, especially if you're in Africa. A VC-funded startup is a game of pass the parcel. Each round, you raise large amounts from investors, and the previous investor only cares about you living enough so that the next investor can buy into you unless they've got a lot of money to keep funding you, which is not always the case. So how do you answer this question? This is a great question. Let me tell you how we thought about this. We want to have a runway of 18 months so that we have 12 months to execute with our head down and 6 months to raise with some buffer. We're doing 100K MRR dollars at present, and the revenue milestones we expect at Series B is 300K MRR. According to our hiring and our marketing plan, with our assumptions on the key drivers like CAC and customer retention, we need 2.5 million for hiring and 3 million for marketing. G&A should be around 1 million on that hiring plan. Adding in a buffer of 1 million, our base plan is about 7.5 million. We have developed scenarios, of course, for a downside and an upside case. If we have strong product market fit, we can comfortably raise maybe even 12 million, depending on the interest, and spend it properly with some pretty good ROI, according to our numbers, our analysis anyway. We're feeling out the market with investors to understand what their appetite is and the kind of aggression they'd like us to commit to. We're ready to go for the moon. We'd love your thoughts on this, right? So that was just all about having clear ideas about the sources and the use of the funds. How much do you need? How much are you going to spend it for? Why? Do you have contingencies to spend more or less, depending on what those key milestones could be? It does require you having done some work, but there are tools to help you out with that. Check out the free runway model, which I'll put a link to in the notes below. And if you want to check out the fundraising models, they're all included within those analyses to help you out. Now, if you're struggling with your pitch deck, head over to perfectpitchdeck.com and we'll be happy to help you get a perfect pitch deck. That's me, Alexander Jarvis.